Hi, my name is Alex Gulabowski from Aperio. Today, I want to talk to you about using structures to protect your assets. There are different ways of structuring your business. A combination of structures can provide you the maximum protection. There's no magic formula here. It all depends on your personal and business circumstances and objectives. What are the different structures? Firstly, there's a sole proprietor. The advantage of this structure is that it's only you. The cost associated with setting up an ongoing administration is minimal, but there can be problems. From a tax perspective, you have limitations. Your income after business expense is all taxable to you. There is very little that can be done to minimize it. More importantly though, is if something goes wrong, a business failure, you cause a loss to another party or an injury, you are totally exposed. And your personal assets, including your home, are potentially at risk. Now the second structure is partnerships. Again, a simple structure. You partner with someone else and operate the business. It's a low-cost setup and ongoing maintenance. But the problems are still there. There's still limitations to reduce your tax obligations. Again, if something goes wrong, your personal assets are totally exposed. But worse still, you'll be liable for your partner's actions within the business as well. The third structure is a company. A company is more expensive to establish as well as to administer and maintain than a sole trader or a partnership. If you are the company director, you're responsible for the conduct of the business and may have times when you need to provide director's personal liability. The advantage of a company structure is that it's a separate legal entity. Shareholders are protected to the point of only exposed to their shareholding invested. So other investments and other assets are not at risk due to actions of the company. A company structure also provides more scope to direct income or to retain profits, and therefore is more tax effective. The final structure is trusts. Like companies, they are separate entities and are more costly to initially establish and then maintain. Now, each year a trust is required to distribute all profits, and unlike a company, cannot retain earnings. There's a range of trust structures. Unit trusts, family, discretionary, superannuation, or a hybrid. They are designed in order to give you as much flexibility as possible in terms of tax liability and income distribution. But most importantly, they add an extra layer in terms of asset protection. Trusts provide the maximum protection of your investment and personal assets. A combination of these structures may be used to provide the best possible day-to-day business operation, while at the same time adequately protecting your assets from various exposures and risks. In conjunction with your accountant and financial advisor, they will be able to consider all your present circumstances and develop a strategy specific to your needs. I'm Alex Gulabowski, and I wish you all the best with your ventures.